What if I told you that the financial choices you make today could secretly shape a future of freedom and wealth? That's the true power of long-term investing. No hype, no chasing quick wins, just a smarter way to build lasting wealth. In this video, we're going to explore why long-term investing makes so much sense, how you can structure it, and what strategies you can use to make it work for you. So why is this topic important? Because most people dream of financial independence, but few actually achieve it. And the reason isn't lack of intelligence or opportunity, it's often a lack of strategy, patience, and perspective. Long-term investing is the bridge between where you are today and where you want to be. Let's begin with the basics. What exactly is long-term investing? At its core, it's the practice of holding investments, such as stocks, bonds, index funds, or real estate, for years, often decades, with the goal of compounding growth. Compounding is the secret ingredient here. When your returns generate more returns, your wealth begins to snowball. Time becomes your greatest ally. Now, what's the real purpose? The purpose is simple. Long-term investing is designed to protect you from short-term noise, volatility, and emotional mistakes. Markets move up and down every day. Headlines scream about crises, inflation, or politics. But in the long run, the market rewards patience. By staying invested, you sidestep panic, avoid the trap of buying high and selling low, and allow your money to work for you quietly in the background. How do you structure a long-term investment plan? The first step is clarity. Ask yourself, what am I investing for? Retirement? Buying a home? Funding my children's education? Each goal may have a different horizon, but they all benefit from time. Once you know your why, you can build the how. Here's a practical approach. Diversify smartly. Don't put all your money into one company or one industry. Spread it across asset classes, stocks, bonds, ETFs, maybe even real estate. Diversification doesn't eliminate risk, but it makes your portfolio more resilient. Automate your investments. Set up automatic contributions each month. This way, you don't have to rely on willpower or timing the market. You just keep feeding the plan like watering a tree. Think globally. Don't limit yourself to your own country's market. Adding international exposure can open doors to growth you might otherwise miss. Review, don't obsess. Look at your portfolio maybe once or twice a year. That's enough to adjust if life circumstances change, but not so often that you're tempted to react emotionally to market swings. If you don't know where to start simple. Index ETF are one of the smartest and easiest ways to invest, especially for beginners. They let you own a small piece of hundreds of top-performing companies, all in one move. Take the S&P 500, for example. It tracks the 500 largest companies in the U.S., names like Apple, Microsoft, and Amazon. Over the long term, it has delivered strong, consistent returns averaging around 10% annually over the past 90 years, with significantly lower risk than investing in individual stocks. Use automated apps and just start. Stay tuned, because later in the video I will provide a simulation that will amaze you. Now let's talk about the benefits. Long-term investing rewards patience with stability and growth. Historically, the stock market has outperformed most other asset classes over decades. The longer you stay invested, the greater your chance of positive returns. It also allows you to align your money with your life goals. You're not just investing to make money. You're investing to create opportunities, the freedom to travel, to work less, to live on your own terms. But what about the risks? It would be unrealistic to pretend they don't exist. Markets crash, recessions happen, and inflation can erode returns. The problem many investors face is fear. Fear makes people sell at the worst moment. The solution? Match your investments to your time horizon. Money you need in the short term should not be tied up in risky assets. And above all, remember, volatility is not your enemy. It's simply the price you pay for long-term growth. Here's a story to bring it home. Imagine two friends, both 25 years old. One starts investing $200 a month and never stops. The other waits until age 35 to begin and then invests double $400 a month. By age 65, the first friend has far more wealth because those extra 10 years allowed compounding to work its magic. The lesson? The best time to start was yesterday. The second best time is today. So let's summarize. Long-term investing makes sense because it harnesses the power of compounding, shields you from short-term noise, and builds a bridge to your goals. It's not about luck, it's about discipline. It's not about predicting the future, it's about preparing for it. And here's my message to you. Financial independence is not reserved for the few. It's achievable for anyone willing to commit, to stay patient, and to trust the process. Your dreams are within reach. You just need to give them time to grow. Do you want to find out how to save more, invest better, and plan concrete goals? If you'd like to know more, subscribe to the channel and watch the next video.